FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, we're going to take a look at three example trades guys. I'm going to give you two examples of how not to take a trade and one good example of how to actually take a trade. Alright, so this is all using the FXN indicators. So hopefully this will help you avoid getting into bad trades and also help you getting into good ones. So without further ado guys, let's get this started. Alright guys, so welcome back, and what we're going to do, is we're going to talk about the two bad trades first, and then we'll end it with the good trade. So two bad trades. We're looking at Euro NZD and we're looking at Euro AUD. Now, why these two pairs? These two pairs, if you didn't know, they kind of like each other, right? They're like brother and sister, so they kind of always go with each other. So this is what it looked like essentially this morning during the US session. All right. So here is what you're looking at right now. And this is what you had to look at during the US session. I'm going to actually show you what it looked like when I took the trade so you can actually see. But I want to talk about this, right? So essentially, if you're just looking at this, right, what is it that you're potentially looking at or could be potentially looking at as a trade setup for the US session, right? So what happened essentially during the London session? Really nothing happened, right? You just moved down to the bottom of the range. The bottom of the range is about 30 pip range. So you're at the bottom of the range here. And so nothing happened really during the London session. Now look what's happening basically for the opening of the US session. Right, you had a move, went up to the middle of the range, come back down, okay? And then now we're trending what? Towards the bottom of the range. So a lot of people would probably say that this is essentially what? This right here would be what? A type 2 pattern, right? So what's wrong with the picture, okay? You clearly look like you might be having a type 2 pattern at the bottom of the range here, right? Clear W pattern here. And we're right at 9 o'clock, which is the opening of the US session, right? So what's wrong? So let's play this out real quick. Look, you even get a crossover there. Do you see that? So what's stopping you from taking the trade? Is there anything at all stopping you? Two things really that should stop you from taking this trade. Even though the setup itself looks perfect, right? It looks perfect. The setup itself looks perfect. You have a second leg, right? Type 2 setup in the box. You have the crossover. Everything is literally perfect. So what's stopping you, or why should you not take that trade? Well, I'm going to give you 3 reasons why you shouldn't take the trade. All right? And there are 3 really big reasons. So reason number 1 is that you're about to hit the middle of the range. That's 1. Okay? So if you're taking this as a type 2 setup, remember that you still, when you take a type 2 setup, you have to get through the middle of the range. If you can't get through the middle of the range, that's a problem. That means that this is not the low of the day. Because remember, at the end of the day, what are you doing? You're essentially trying to find or trade off of the high or the low of the day. So if you're taking this as a type 2 pattern, right, you're saying that this right here is going to be what? The low of the day. Right? So if you take this trade, you're taking it literally right as it gets to the middle of the range. That's a problem, okay? Because the next candle, it could just reverse, right? So that's one. The second thing that I see wrong with it is that you have basically the 50 and both the 200 EMAs writing on top of price. So you can see the 200 EMA here scoring straight through price, and every time that price gets to it, it gets rejected. Gets up, gets rejected. So what potentially could you expect on the third time that it comes up here? It can get rejected, right? The third thing is, if you just look at the bigger picture, what do you see? Can you see what I see? So what is this up here? Most importantly, what is all this right here? Right? So peak formation high, and this is level 1. So what is one thing that you don't do when you're at level 1? You don't trade against the peak formation high. You don't counter trend trade on level 1. Okay? So, as perfect as this setup is here, and it has everything going for it, there's 3 big issues with it. 1 is peak formation low, 2 you're at level 1, and 3 you have the EMAs right here on top of it, which basically is telling you that it's going through a transition from an uptrend and now going to a downtrend. Okay? So that's the reason that you shouldn't take that trade. All right? Let's take a look at Euro AUD so you can see that one as well. So here is Euro AUD, and what do you know? It looks pretty much damn near identical to Euro NZD, right? Same time as Euro NZD, right? Second leg W formation with the crossover happening right here, right? Here's the only difference on this one is a little bit, there's 2 different things. One is that this one is not tagging the middle of the range. It's actually tagging the bottom of the range, which is not that big of a deal. What is a big deal, though, is that the 50 is riding along with it, right? So you can see here the 50 is riding along with it. And also, not to mention the same thing, if you just look at the bigger picture, what do you have? You have peak formation high, level 1, right? So you're not counter trend trading on level 1. Also, you can see the EMAs are basically coming from an uptrend, so you're going through a transitional period as well. So this is why you don't get into these particular trades, even though the setup may look perfect. If you just take a couple moments to look at the other factors that contribute to this trade. USD JPY. All right, so on this particular trade, what are we looking at here? We're looking at essentially a move straight up from Asia all the way through London, and now we find ourselves where? We find ourselves in the middle, right? So essentially what I like about this trade is that we're right at the opening essentially of the US session, right? So right at 8:45, 9 o'clock or so. And essentially, what are we at? If we're trading off the high or the low of the day, we're not at the high, we're not at the low, we're kind of in the middle, right? So typically any time that we have that kind of situation where we are in the middle of either the high or what is the perceived high or low at that time right now, especially during the US session, we're very likely to see this. Basically just a continuation trade. So that is essentially why I took this trade. Also the ADRs here, we have a 52 ADR. We've only moved 16 and 9. So a little bit over, 25 pips or so. So only half of the of the average daily range. So we still got another 25 pips or so to go. Let's take a look and see how everything played out. I hope that this video helps you in picking better trades and also knowing how to identify better ones, guys. Thank you so much.